talk about the key points of implementing a system for CIP. So hopefully you can leave today with some ground rules and some action items so that you can start diving in on these strategies and best practices and put them into real play. We'll start off about why CIP really matters. Just so we're clear, CIP is really tracking the projects of fixed assets before they become fixed assets and capitalized assets. It's not just construction projects. It could be anything. It could be a construction project of a machinery equipment where it takes 10 to 20 different components that need to come together to be built before we could start production using that machine for production. So that, in a sense, is a construction project. So it's not just about building a building or a leasehold improvement or a remodel or anything like that. Large constructions, can it be those? Yes, absolutely. But they can also be smaller things. In the retail world, they can also mean different things for, I think, what some retail people and restaurants call bump in the night. It could be anything that needs repair that goes out across different locations within our facilities. And we want to track all that to make sure that we're tracking every aspect and facade that moves through our books for payment progress, any kind of a scheduling for disposals on the out when the new one comes in and so forth. So tracking that can be quite the feat, especially because it doesn't just involve the finance team. It involves facilities, maintenance, tax, the upper C level, FP&A for financial planning and analysis. It involves so many different people, and it doesn't just live in finance. But most of the time, I find in my 26 years of experience in the field and out of it, is that it lives in spreadsheets most of the time. And I love it when people say, I have these templates, but they're really just spreadsheets that have rolled over and been evolving. And so all of these things matter because it has a real direct impact on financial reporting, its accuracy, how we get our audits, our processes in place. It's critical for compliance purposes and even forecasts and budgeting of these projects. Where are these projects at in time and space? Are we on time? Are we behind? How and why are we behind or even on time? So it flips back and forth from positive to negative on every project aspect. And it's really important that we understand that and we track it in a good, sufficient way with processes and policies that help us hold our hands as well. Because why? Because when we start doing this, we can avoid misstatements of not just overcapitalization, but also undercapitalization. More times than not, when I review projects with customers, I find that not only have we sent too many assets over multiple times from a spreadsheet because we just didn't know, but we've also most of the time missed sending those over as well. So we want to make sure we capture all that stuff, which leads us into common CIP challenges. So the first one that we have is incomplete or delayed project closeouts. If we don't have a system that we can all join in and look and view and contribute to, and pretty much use as a communication device, then we start seeing all these incomplete and delayed projects. They either don't get closed out properly, on time, or sometimes, unfortunately, not at all. CIP is a cross-functional effort across multiple departments, multiple people that are part of this project, even the project manager of this project as it moves forward in time. And a lot of times when we have spreadsheets, that's just what they are. They're a spreadsheet. And what can happen in a spreadsheet is a multitude of things, but mostly it's not just a template. So we have different versions of a spreadsheet depending on the project, depending on the person, depending on if it's a project that's lasted 2 to 3 years. Maybe that spreadsheet has many faces, many tabs, many people touching it, which just means more opportunity for error and inaccuracy. The disconnect between finance, facilities, and procurement teams, again, I can't stress enough that it's a cross-functional effort, CIP, and that it's not just finance. And oftentimes I see where it's laid onto finance, but the communication is still missing. The communication between who's out there managing the project, of receiving all of the things that come in, dealing with the architects, the city maybe for permits, dealing with all the different contractors that come in and out, the progress payments, things that get broken and then have to get replaced. If that communication is not going back and funneling down to finance, how are they supposed to know? But a lot of times the pressure comes down to finance, but again, it's very cross-functional. So when we're only using spreadsheets, that becomes quite the problem because it's not really a communication device. When we start automating this system and allowing other people access to come in, to review, to process more reports, maybe to move line items around or transactions around or split these line items up into individual assets someday, then all of a sudden it becomes a communication tool as well, and not just something that's functional with numbers. The risk of misclassification or early depreciation happens a lot in spreadsheets, especially if we don't have communication across multiple departments and people that are part of these projects. What I often see is that everything gets bulked. So let's say we are doing a building remodel and we get from the contractor this invoice. I often see where the invoice is one line item with this $1 million cost. And then what happens is that when assets come online, it's not relayed to the finance person or whoever is keeping track of that spreadsheet or the project in an automated system even sometimes. And what happens is that those assets get moved over to the subledger and they're misclassified. They're all written down as real property from this building remodel is the description I often see in subledgers with $1 million attached to it. And what happens when it gets moved to the subledger is that it's now on a 39-year schedule, where if we really look down to the details of the underlying pieces of that invoice, then we'll see that sometimes it's flooring, beautiful flooring, not the actual subfloor, but the flooring, which then can be moved into its own line item of personal property. And then instead of 39-year schedule, it can actually be written off with some bonus depreciation. So on a 7-year schedule or a 10 or a 5 or whatever that case is for your particular organization. So these are the things that we're talking about you have a risk of. And when there's not a lot of visibility and strategies behind CIP, this often occurs, probably 9 times out of 10 in my experience, which just puts us back to the lack of visibility, which really ends up to real-time costs. It really does cost us a lot if we don't have a good grasp of this information and these projects as they move forward. Some best practices that I always talk about, I give lectures on quite a bit, is centralizing this. So centralizing this process where we're no longer using multi-versions of these fixed asset templates that are spreadsheets. Instead, we're using a dedicated system that allows us the control over standardization, over standard reporting, those sort of things that allow us to see high level, mid-level, and into the details, the weeds of the product. It's very important that we integrate with AP or PO to capture that spend, or at least the ability to easily import instead of data entry, copy paste. That doesn't work, especially if you're working with a high volume situation with your projects where you have multiple projects going at once. You have all this information, all these progress payments in and out, lots of vendors. It gets really cumbersome. And the more we can automate any piece of that into our daily practice, the better it's going to be for auditing, compliance, accuracy, and just processes in general, workflow. Trying to get that workflow automated as much as possible, which gets down to the automation of capitalization rules that meet your thresholds, meaning a threshold. Maybe you don't capitalize anything under $1,000. Larger organizations, I see $5,000, and in the Fortune 50 space, I see $10,000. So whatever that threshold is, making sure that those assets, when they come online through the projects, that workflow also gets automated, and that capitalization is following that rule base of your policy and your process, your standard procedures. It's just to move that forward. So again, automating it just that little step further and further as we can, which also gets us to project templates for repeatable builds. So we can analyze the data through standard reporting or customized reporting within our organization. So we're all seeing the same thing. We're all looking at the same information, and we can build our processes and policies around that. So compliance and reporting tips when we're thinking about CIP. Again, visibility and accuracy is everything in CIP. Once we get our project set up and our data is in there, we have our automation workflows working from AP to PO into our transactions, and we're placing things in service and bringing them online and sending them to the depreciation. At the end of the day, what's really important is the visibility and accuracy. in our CIP. So ensuring that we have audit trails on all projects, all the adjustments, all the things that get sent, all the things that can come back for debits and credits, all that information. The spreadsheet doesn't track that history. And if it does, it's because it's a manual effort of the user to track that history of different versions of that spreadsheet. So there we go again, more versions, more tabs. Sometimes I see these large, massive spreadsheets and they take forever to open. And I'm pretty sure some of you know exactly what I'm talking about. And so we want to make sure that we're minimizing that effort so that everything is streamlined. Maintaining that proper documentation is really important. And in the Sage CIP, invoice contracts change orders currently cannot be attached here, but they can be attached to the depreciation. But just so you know, it is coming. It's already on the roadmap for us to be able to attach that information to those projects as well. So linking and automating those workflow automations as much as possible for that seamless transition and documentation. When you use a system that is seamlessly integrated, the history shows everywhere where that asset came from, date, time, stamp, who sent it over, those sort of things. And in my auditing time, I could also see that everything for fixed assets from start to finish, the entire life cycle, is just a checkbox. But what they're really checking on is how much time someone manually checks and moves things, how much manual human effort is in this process. And then that's what they dive down into. So again, if we can eliminate that manual effort from a person standpoint of doing, then we also eliminate the audit. I cannot stress this enough because again, the key point here is visibility and accuracy. They're everything in CIP. So we should be running reports regularly for aging, budget versus actual, capitalization status, if we need to move things around, if we're always running reports regularly, which we can't necessarily do in Excel, especially if we don't have integration on. If we aren't integrating APPO and having it dump into an automated solution on whatever that cadence looks like, running the reports, we don't know where we are. And especially if you have a lot of volume happening. I worked at a Fortune 500 as the fixed asset director for many years, and we had so many projects moving at once. When someone said, hey, what is our total spend of this project as of today? Before we went into an automated system that I implemented, nobody could have that answer in any kind of a quick time. So it took a few weeks to gather that information because there's so many moving parts and different locations and different people, because again, it doesn't just sit in finance. And that was a problem because by the time they put it together, it had already changed because of the volume and the frequency. So when we use something that's automated, we're able to obtain that information because those workflows are also automated and streamlined. We can answer that question pretty quickly. You're probably saying, Angie, that's easy for you to say, but we have lots of things to do. And yes, I totally agree. But if you're in an automated system and you're running these reports regularly, you'll be able to see really quickly if your stuff ties when you send it to depreciation for your subledger. You'll be able to notice right away. So make it a cadence to run these reports quite regularly, probably more than once a month for sure, just so you're on top of it, especially if you have a lot of assets. Why automate it? If you haven't understood already, again, it handles large volumes of assets and complex project structures. So meaning that it keeps those templates, it keeps the standardization. When you automate the APPO imports, it also handles that volume quite largely. In most systems, and as well as the Sage CIP system, you can import that data across all projects at once. So you're not importing one project at a time. You can import across all the projects at once. And if you don't know the line item number in which the asset sits, every project starts with a pending line item, which is 999. And most of the time, just to get the data in, especially if you're high volume, just send it over into each project at once into the pending line item, because then it's there and you can start running reports against the pending just to see where everything's at. And then you can take your time as the project moves through its process and timeline. Then you can start moving those pendings into where they need to go. So that's a good way to get in, get out, make sure everything's there, reconciles, at least from that high level. And then you can start getting into the details as you see fit. Again, the integration is is really nice here. It just zips up the workflow process. When you automate, you get reports. Spreadsheets are not a reporting system. Once you start doing that, then you get all these different reports and you can get down to the weeds of this information, high level. You can also get a consolidated report quite simply in the Sage CIP system, where you can see all your projects at a point in time. You can just see your active projects. You can weed out those that are not, and you can see where your actual is versus your spend versus your pending, all in one spot. So that in itself is worth it, because if you're thinking about, I'm using all these spreadsheets, or maybe I am using an automated system and I'm using spreadsheets for whatever reason, when it's all in one place, you're able to run those things pretty quickly. And it just streamlines the capitalization process. So there's no double data entry or triple data entry here. And then also the systems, when they're integrated, they track that movement historically in the back end. So you can also see that information, which again is what an auditor is always looking for. And when you do this, it also supports the tax piece. It supports the GAAP. I know that ERPs can do GAAP really easily, but the big, huge key here for the compliance and the full life cycle is really about the tax piece, because tax and CIP and tax compliance are so intertwined, and not just even on the federal tax level, but also on a property tax level. And I hear this a lot from PwC, Deloitte, all the big ones. I talk to them all the time to see, has anything changed? Is there anything we need to think about into our product as far as processes? And the biggest thing they always report back specifically about CIP is that CIP is such a mess that when they go to do property tax reporting, that 9 times out of 10, they're either including the CIP in the property tax, which you shouldn't be doing, because if it's not placed in service yet, why are you reporting it? Or they've moved it, they haven't moved it from CIP to fixed assets, or the opposite. So it always stems, the problems seem to always stem from CIP. So again, the tax is such an important piece here. I want to talk about how to implement CIP. So regardless of what you're doing, again, I would love it if you were off a spreadsheet, but even if you're on the call today and you're already using Sage Fixed Assets and you're wanting to know how to improve the implementation process going forward, these are the steps that I've had great success with, either myself as a user or with other customers over the last 20 plus years. First of all, you have to start with all the key players. So if you're finance and you're like, okay, I want to do this, I either want to improve my process that I currently have in the system, or I want to move to a system from my spreadsheets, what do I start to do? First, again, it is a cross-functional effort. So all the key players, even when I used to sell it, I'd say, oh, this is great, you're in finance, but I think before we even sell you what you need, I'm trying to sell you a solution to your problem, but it's not always your problem. So we need to reach out to tax, to finance, to facilities, maintenance, FP&A, get them involved. They're a huge player in CIP because they're the ones giving the money. So have everyone involved and then see where the pitfalls are and see how you can implement that into your policy, your practice, your workflows, and everything that involves CIP and fixed assets lifecycle. And then when everyone's together, set up a project plan. Don't just go in the system and start playing around. Always put a plan together and read that plan together with everyone who's involved, all those key players, because that'll make the implementation go faster, smoother, with less headache. Instead of 2 steps forward and 1 step back, you'll just go 2 steps forward and keep going forward. Create project templates. So I often see that people have reoccurring projects, which gets back to that standardization. So a lot of times I'll implement one project and create it as a template for everybody. And what that means is it's pointing the integration to the depreciation system, to the right company. It's also including all the custom fields, the field mapping, maybe some groups that are in there, all that information. And for those that are using the system right now, I'm happy to announce that in the version that's coming up, 2026.1, you'll be able to copy project information a little more easily. It'll be even more streamlined to allow you to do real true templates, because then you can take that information and keep reusing it for that standardization. It'll also cut your implementation time in half of a new project. When we do this, we're identifying on our project plan and our templates, we're identifying those fields again and the integration points that we want to use when we send it over to either or both into the asset accounting depreciation system or over into the asset tracking for inventory. Then once we get the shell, we get the container, we get the process, we have our project plan, then we start to clean the data that exists outside of the system or in the system. If you're already using CIP and you're wanting to redo things, reset them up, maybe it wasn't implemented to your liking, maybe somebody else did it before you adopted it. See that a lot, especially in accounting. So you want to get the data into, again, Excel. It's this reoccurring cycle, I know. But you want to clean it up. You want to reconcile it against your project where you stopped, format it, and then you want to import it. So import the project data, reconcile again, because us accountants like to reconcile 5 different ways for everything we do. Totally understand. So once you get the data in, then you'll want to run the reports that are within the system and then reconcile those back to what you started with to make sure nothing got left behind. So no asset gets left behind in any data conversion. That is always the key. Once you do that, then you can start moving line items. Why do I say that? Because again, going back to my recommendations and my tips, that when you import your data, it's good to import them all into the pending line items, because then you can start to say, okay, this goes here, this goes there. Maybe I do need a new line item. Maybe I do need to break out building remodeling, and I do need to break those out into line items. And so now I can start creating line items, which are assets or expensed items, to separate those out as well. So now I start creating these items, and then I can start moving the transactions out of pending and put them elsewhere. This is also where I can test out transactions. When you get everything in there and then you want to test out bringing transactions in from AP or PO afterwards, my suggestion is to test out one project and one pending line item first to get the feel for it. It's easier to clean up and delete if we do that. So that's always why I suggest just baby steps. So test out one import of transactions after you get everything done, and then move it to the pending line item in one project, just so you can get the feel for it, start moving it around. If you messed up, you can clean it up real easily and do it again until you get comfortable. And then we go live. Now you're moving forward, you have new projects, you can use the same project template going forward. Everything is connected, you're comfortable using the system.